What's up YouTube, it's Lou here, hope you're all well. I'm finally back. Thank you guys for always supporting the channel and for your patience. Before we get into this video, I just want to say if you enjoy this video today, please like, subscribe and comment. Let's get this video to 50 likes. And yeah, please do this as the algorithm is always working against us, guys. It never wants to grow the channel, so this is what you guys need to help me with. So we know in the last few videos we're looking at around 30 to 31, maybe even 32k as a bottom target. If we do go down as low as that, how do we get down there? Well, if you remember previously, I told you guys that I did think we were going to come back into this green zone after we topped out up here. I said that we're probably going to come back to this double bottom neckline. This is where I think we could get a bounce, but you lost those EMAs and that, so I told you guys that potentially we could be coming into this yellow box. Even from up here, I wanted to always warn you guys of this head and shoulders, as well as the rising wedge. As you can see here, we've got this these two lines here and here, and they're constricting the price action, making them all smaller and smaller. And you just go sideways before breakdown, and you come back to the lowest body candle close, so it'd be around 35k, which would be the rising wedge technical target. For us to meet this technical target, you need to lose the ascending support, and that's what you're currently doing with today's daily candle. Now, the daily candle has not closed just yet, so obviously we can't make a judgment as of now. What I can say that you have done is finally retested the 618 for the first time. You just missed it over here, so you've just hit it for the first time now, which is good because obviously yeah, this is the area where we should not lose. This is where we should actually bounce from to continue this uptrend. You can see up to 53k to then 56k, but you can see what I've just drawn here is like sort of some bearish continuation pattern, or symmetrical triangle, or a bear flag, bear pennant, however you want to call it. So there's a good few ways of measuring what the target is. So on the breakout there, you can see we're just going to come down to the low of this yellow box. I've already given you guys this target in and around this area, which is what I said last week. Because we were saying that this was looking like this, we were waiting for this capitulation candle, something that we got the last two previous times. Don't like here, a capitulation wick, sorry. So that's why I was thinking we're going to come back and test these lows over here, maybe get a wick down to the 786, because actually you can lose the 618 as long as you hold the 786 and get a bounce above the 618. Once again, remember, you can lose the 618 as long as you hold the 786, and you must bounce back above, reclaiming the 618, confirming as support and no longer going below. As long as you can do that, then we should start to head up. That is the fake out way to the downside if we were to continue up. If we were to lose the 618 now, that is what we have to do if we want to continue back up, basically. So of course, if you fail to do that, where we come down to this 786, bounce back up and fail to reclaim the 618, and we just confirm it as resistance instead of reclaiming it and turning to support, we're creating this reverse wave where we'll lose the 786 and come down to the one. You could see that would be the scenario where we do come down and meet this rising wedge technical target. Don't forget, guys, that it's vital to hold this one fib level, this wick low. As long as you're above this wick low, then actually we should not go down lower than this, okay? That obviously makes sense. If you don't go lower than this wick, then we're not going to go lower. But yeah, as long as you're above this wick, then we shouldn't have in our mind that we're going lower. As long as we're above it and holding it as support, then actually we should go up and break this high of 48k, and we should continue up. I'm going to show you today some more mid to long term targets once we do obviously low out. Potentially the bottom of the dip was already there, back at 33k. But yeah, I just want to go through some more potential scenarios. So of course we want to hold this one fib level, just meet this rising wedge target. If this were to play out, since we are losing this ascending support, come back down to the one, or just hold the 786 and reclaim it. As long as we're holding the one and we can reclaim the 618, then we should try to head back up. We know the next target is this next high, 53k, potentially even this wick low over here, and this, some sort of descending triangle support over here, like that. So yeah, that's going to be some resistance ahead. So yeah, that's our target going forward, as well as the 53k high. Now, of course, you can see if we are losing the one, we do have that 1618 technical target. What is acting as confluence is the Head and Shoulders technical target as well. But we were, previously explaining how we think that this is like such a big brick wall. We don't think that this 1618 target and the Head and Shoulders target will be met. We're thinking more the 1414 and the 1.272, more the 31k area, because you can see it's lining up with this larger 1.272, which is basically the bottom of the range, like an exact support. But obviously support is not just an exact area, it's not an exact line, it's an area of support. It's a massive location. It can be specific line, like a psychological level 30,000, but you can see if we're looking at the psychological level 30,000, this support actually goes until 32k. So it's never really an exact line. It can be, you can see you got an exact wick off there, 30,000 exactly, but yeah, you know what I mean, most likely a line. So what I wanted to show you is from the high to the low. I've shown you this already previously. We know this is the dead cat bounce scenario where already we've come into the 050, so it could already be happening. We could already be going into this bear market, or at least back down to these lows. So for me personally, as long as we're above these lows, we're in this monthly bull market. But technically on the weekly time frame, if we go to the weekly here, you can see we do have this downtrending structure where we've got, a low now lower than this low. And this is when I flip the sentiment of what's going on in the market. I took a portion out of the market, sitting back, waiting for a true direction, and you can see months later, after we lost this low back in January, we still haven't decided what we want to do. We've got above the EMAs, you can see here, we've got above those EMAs, invalidating further downside, basically telling us, oh yeah, we're back bullish, and then straight away, a few weeks later, straight back under. Very bearish signs. So you can see, that's why for me, if you remember previously, it's so important for us to stay above this wick over here, this 30k wick. This is why I think that this is going to be like the true bottom. I don't think we're going below this, 29.9k. I don't think we're going below that. But what I wanted to show you is that if this is the true bottom right now, and we do get above this, 53k resistance, 52k resistance, then eventually we would actually have a 108k technical target for Bitcoin. You can see here from the high 1 to the low 0, get above the 618, we're going to the 1618, 108k. That's if the low's in, guys. So at all costs, don't lose 33k, and we should head up higher to 100k. The bigger the dip is, the bigger the rip will be afterwards. So the bigger the dip, the bigger the rip. Just remember that, guys. Don't lose the 1. We're going to continue. The 1 is higher than that 33k wick. So yeah, as long as we're above that, we're going to continue to 108k next target. Go lower in this dip, as long as it's above 30k wick, then we should continue up and have higher targets than 108k. Thank you, guys. Please like, subscribe, and comment. I'll bring you over to the crypto packages now if you're interested in a course, mentorship, or even just a group chat, and I'll catch you in the next one. Peace. So guys, here are the crypto packages. If you think you have what it takes to stay disciplined and consistent over the next 3 to 6 months, then I'm more than happy to help you 10x your learning curve. So you can already be a complete beginner, or you can be advanced. It doesn't matter. I'm here to turn you into a self-sufficient trader that doesn't need anyone else's guidance by the end of it. I even had to pay over £10,000 to get all this information. That includes scams, scam signals where I lost 3k, scam master account management where I lost 5k, scam pyramid scheme companies for bad courses. Then I found my mentor and I had to pay over $2,000 for just a 2-hour mentorship lesson. What you guys are getting for £650 is access to the chat until the top of the market. So if the top of the market is a year away, do 1 year times 40. So you're definitely getting your money's worth. You also get the course included in the mentorship, and I'll actually not just do a 2-hour lesson with you. I will stay here for a month period to make sure that you become a self-sufficient trader by the end of it. So if you're interested in this, head over to my Twitter, Louis_crypto, to the pinned post and message me there. Thank you, guys, and I'll catch you in the next one. Peace.